Hey everybody, welcome to Mortgage Today for Tuesday, March 26, 2024, and oh, what a day it was. UMBS opened the day down 5 basis points. Stock futures were up 17.75. Bonds were sideways to slightly stronger in the overnight session with 10-year yields near the best levels of the day before the 8:30 a.m. data. There wasn't a major reaction by any means, but modest gains have given way to modest weakness. Durable goods came in at 1.4 versus a 1.1 forecast. It was negative 6.9 previously, so that is quite the change. January was revised down from 6.2 to 6.9, and then it swung all the way back around. No real indication of what was causing that. U.S. stocks were set to rebound from 2 days of losses as investors look toward U.S. data for pointers on whether the recent rally has room to run. Morgan Stanley and JPMorgan Chase & Company strategists were the latest to warn that lofty valuations will be hard to justify if they're not accompanied by an acceleration in company profits. The S&P 500 is up almost 10% this year on a combination of healthy U.S. economic data, Fed rate cut wagers, and optimism on artificial intelligence. Home prices fell 0.1% in January according to the FHFA Home Price Index. On a year-over-year basis, home prices rose 6.3%, which is down from what it once was, but is still a healthy measure. Home prices rose 6% year over year according to the much broader Case-Shiller Home Price Index. While there is a large disparity between leaders such as San Diego versus laggards such as Portland, the broad market performance is tightly bunched up. It is also true of high and low tiers. The average annual gains between high and low tiers across the cities tracked by the indices is just 1.1%. Low price tiered indices have outperformed high priced indices for about 17 months. But that's in percentages. There aren't many entry-level homes for sale, so there's probably actually a lot more higher-end homes selling within that data range. The Airbnb bust continues in Florida. I don't really like that term. I think it's overrated, but the Airbnb bust, which is a term people are bantying around, continues in Florida, where condo prices are falling as costs rise. The difficulty in getting homeowners insurance is raising maintenance fees, and many owners who bought property as a potential Airbnb are looking for exits. Inventory is up and sales are down. This is largely a condo phenomenon because single-family prices are still strong, and it's also not a big number within the relativity of things. In the bigger picture, bonds found resistance before 10-year yields managed to break below 4.19 but remained well under the 4.32 ceiling after yesterday's weakness. Today began slightly stronger but shifted weaker after the durable goods data. The home team rallied after the 1 p.m. Treasury auction came out on the strong side, and trading levels trickled just barely into positive territory. Wednesday is the quietest day of the week for economic data, but also the last day of the Treasury auctions and the last full trading day in the month and quarter. Translation data-driven volatility is unlikely, but random volatility surrounding the auctions and year-end and month-end trading could make things interesting. UMBS ended the day down 2 basis points at 100.95. So at 100.95, that puts us handily a bit above that 50-day moving average, which is really our highest trend line amongst the group. We have that Fibonacci up there at 101.273 that I think we'd all love to break through.